Hello traders, you're welcome to this video and I welcome you back to the Forex Geek channel. So in this video, we are going to be diving into one of the most fascinating and widely used tools in trading, and that is the Fibonacci. All right, the Fibonacci tool, but specifically, we are going to be talking about the Fibonacci range trading in this video. Okay, we're going to be addressing that strategy called Fibonacci range trading in this video. If you've ever been curious about how to pinpoint key levels on your charts or refine your trading strategy, then this is the video for you. So stick around, hit that like button, and make sure to subscribe for more trading insights if you haven't done that already. Okay, so first of all, let us start with the basics. Fibonacci range trading is all about identifying retracement and extension levels based on the Fibonacci sequence. Okay, sounds technical, right? But it's actually pretty simple when you break it down. Now these levels, let me just add the Fibonacci levels on the chart. Right, let me add the levels on the chart. Okay, let me use this. All right, this is for the Fibonacci retracement, and then this is for the Fibonacci expansion. Right, it's for the Fibonacci expansion. Right, now these levels, as we can see, they help traders predict potential support and resistance zones in the market, making them invaluable for both beginners and experienced traders. Now, Fibonacci is named after the famous mathematician Leonardo Fibonacci, who discovered a sequence where each number is the sum of the two preceding ones: 1, 1, 2, 3, 5, 8, 13, and so on. But for us traders, it's the ratios derived from this sequence, like 23.6%, 38.2%, 50%, 61.8%, and 100% that hold the magic. So why does Fibonacci work? Markets are driven by psychology, right? And traders often react at these specific levels, creating patterns of retracement and continuation. Now these ratios, as we can see the ratios here: 100%, 78.6%, 61.8%, 50%, 38.2%, 23.6% for the retracements, right? And then 61.8%, 100%, 161.8% for the extension. Okay, now let us assume that a price is trending up, or it's not going to be an assumption because in this example, the price is actually trending up, right? So a Fibonacci retracement can help you figure out where the pullback might end before the trend resumes. So as you can see, I use this as my point A, right? And then I use this as my point B, right? So in this buy trend, this was a low, this was a high. So I used the Fibonacci retracement to predict where the pullback might end. And we can see that the pullback ended at the 38.2% retracement level. All right. So in a trend, you use the Fibonacci retracement to predict where the pullback might end before the trend resumes. On the flip side, Fibonacci extensions show us where the price might move once the trend continues. Pretty handy, right? So we can see now for the extension levels, once the trend resumes, we can see that the extension levels predicted are at the 61.8%, 100%, and 161.8%. All right. So let's get hands on. To use a Fibonacci retracement, you will need to identify a clear swing high and swing low on your chart. And as you can see, this was the swing low I used and this was the swing high I used. All right. Once you have those, you draw the Fibonacci retracement tool from the high to the low in a downtrend, or from the low to the high in an uptrend. What you will see are those magical levels: the 23.6%, the 38.2%, the 50%, and the 61.8%. All right, that those are the common levels that you might likely see in the default settings. All right, but the 78.6% is also one of the levels, and of course the 100% also comes in the default settings. Okay, so basically the levels for Fibonacci retracements are the 0%, 23.6%, 38.2%, 50%, 61.8%, 78.6%, and 100%. Okay. Now, what about extensions? These are used to project where the price might head after breaking out of a retracement. To use Fibonacci extensions, identify 3 points. Okay, the swing low, the swing high, and the retracement point. Okay, so you will notice levels like the 61.8%, the 100%, and the 161.8% Fibonacci extension levels. Okay, so these are critical for setting targets, especially in trending markets. All right. For example, if a price breaks out of a consolidation phase, these extensions give you a roadmap of where the price might reach next. Okay, and if the trend were to continue, the bullish trend, those Fibonacci extension levels give you potential points where the price might get to. Now, here are some practical tips. Combine Fibonacci with other tools. All right, don't rely on Fibonacci alone. Use it alongside trade lines, moving averages, or candlestick patterns to confirm your analysis. Now, secondly, be mindful of the time frame. Fibonacci works in all time frames, but the reliability increases on higher ones like daily or weekly charts. Thirdly, look for confluence. All right, it is important. For example, make use of trend lines in addition to the Fibonacci levels. All right, when you're using trend lines, you're going to get confluences. For example, in this trending market, you can see that when the price retraced to the 38.2% retracement level, around that same point, the trend line was serving as a dynamic support. So when you are making use of trend lines, it is even a better signal when it coincides with one of the Fibonacci retracement levels. All right. And you can also decide to add on other indicators like moving averages or the RSI or any other indicator of your choice to confirm your entries and your exits. Okay. Now, another thing to pay attention to is do not chase every level. Focus on the key levels of the Fibonacci retracement. All right. For example, 38.2%, 50%, and 61.8%. All right. That is for the retracements. And for the extensions, you can focus on 127.2% and 161.8%. Okay. So if your Fibonacci extension does not have the 127.2%, you can add it by coming to the settings. You come to the Fibo levels, you click on add, and then you write 1.272, and here you write FE 127.2. All right, and there we go. Okay, so here we have the 127.2% level. So your focus should be on the 127.2% and 161.8% extension levels. All right, now before we wrap up, let's talk about what not to do. One common mistake is forcing Fibonacci levels on a chart where no clear trend exists. Remember, it works best in trending markets. Another mistake is relying solely on Fibonacci without considering other factors like volume or news. Always take a holistic approach to your trading. Okay, and there you have it, a complete guide to Fibonacci range trading. With practice, this tool can become a game changer in your trading journey. If you found this video helpful, make sure to hit the like button. It really helps support the channel. Don't forget to subscribe for more tips and strategies like this one. Also, let me know in the comments what's your favorite tool to pair with Fibonacci. I would love to hear from you. Thank you for watching, and I'll see you in the next video. Happy trading.